Okay, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. How are you all? Audible, visible. Am I audible and visible to each and every one of you? Hi, guys. Hello, good evening. Audio, video, everything is clear, working fine. Hi, guys. Hello, Hema. Hi. Good evening. Audible and visible to each and everyone. Yes, okay. So today we are going to discuss this Macmillan Module C. Okay, so all questions of Macmillan book Module C of IE IFS that we are going to cover in today's session. So everyone just please like and share the video. Everyone, at least whoever is watching this video, just please like and share the video, right? So let's start discussing this topic. The very first question is, which of the following is not a part of which of the following is not a part of informal financial system. So the financial system can be formal, financial system can be informal. So which of the following is not a part of informal financial system? Money lender, relatives, mutual fund, or mahajan? Very easy, very basic. So the correct answer is, hi Kritik, hello. So Kritik has said C. Chandan, C, and everyone else, which of the following is not a part of informal financial system? Everyone, please answer this question. So the correct answer for this question is what? Okay. So yes, see, informal financial system like money lenders, like your relatives, your friends, right? So they are the informal financial system. Mutual fund actually is a formal financial system. Mutual fund is a formal financial system, and that's why C is the correct answer, because mutual fund is not a part of informal financial system. Clear? Done. Next question. See, which of the following is not a part of formal financial system? Not a part of formal financial system. Association, NBFCs, banks, or insurance company? Everyone, please answer this question. Everyone, guys, please answer this question. Yes. Okay. So, not a part of formal financial system. NBFCs, non-banking financial companies, banks, insurance companies, these are all the part of the formal financial system. Yes, these are the part of formal financial system. But when we talk about associations, association is not a part of the formal financial system. So A is the correct answer. A is the correct answer here. Okay, done. Next question. Which of the following is or are a part of financial system? So I am telling you which of the following system is and are the part of financial system: financial market, financial institution, financial instrument, or all of the above. Everyone, please answer this question. Which of the following is a part of the financial system? Everyone, please answer this question, guys. Which of the following is or are a part of the financial system? Everyone. Okay, so is and are a part of financial system. We have financial market, yes, capital market, money market, insurance market. These are all the part of the financial system. Financial institution, yes, they are the part of financial system. Financial instrument, yes, they are the part of financial system. So yes, D is the correct answer. All of the above is the correct answer, Hema. Okay. Okay, Hema, Kavita, Chandan, everyone, at least everyone, guys, please like and share the video. Please at least like the video, everyone. Okay. Next question. Which was the first bank to be established in India? The very first bank which was established in India: Bank of India, Bank of Hindustan, State Bank of India, or the Punjab National Bank? So the correct answer for this question is, everyone, please answer this question. The very first Bank of India. Everyone. The very first Bank of India. So the correct answer for this question is what? which was the very first bank of India? So if we talk about the very first Bank of India, the very first Bank of India, it was actually the Bank of Hindustan. It was actually the European bank which was actually established by Alexander and Mason Company, right? So it was not the Indian bank, it was the European bank. But it was the very first bank to be established in India. It was the Bank of Hindustan. So B is the correct answer. Okay. Now next, in which phase of development of the financial system was focus laid on the development of development financial institution? So DFI's development financial institution are those in specialized financial institution which provide long-term financing to what? For long-term financing to the infrastructure sector, that is known as development financial institution. So in which phase of the financial system development financial systems has been focused or started? Phase 1, phase 2, phase 3, or phase 4 of the financial system? So the correct answer for this question is, everyone, in which phase of the financial in system was focus laid on setting up the development financial institution? So the correct answer is phase 2. When we are talking about the development financial institution, a specialized financial institution for the infrastructure development in India. So phase second was the phase of the financial system in which the development financial institution has been set up. So B is the correct answer. Okay. Next question. In terms of which section of Banking Regulation Act is the business of banking defined? So banking is defined under which section of Banking Regulation Act 1949? So what is banking? Banking is a process of accepting money. What is banking? So banking is a process of accepting money for purpose of lending and investment in the market. So which section, under which section of Banking Regulation Act is the business for banking is defined? So the correct answer is A, section 5. To be precise, section 5B of Banking Regulation Act 1949 defines banking as a process of accepting money for the purpose of lending in the market. So A is the correct answer here. Okay. A is the correct answer here. Done. Next question. In which year Reserve Bank of India has been established? Reserve Bank of India was established in which year? 1947, 1925, 1935, or 1955? Very easy. Reserve Bank of India has been established in which year? Everyone please answer this question. Reserve Bank of India has been established in which year? Everyone please answer this question. In which year Reserve Bank of India has been established? So if we talk about the Reserve Bank of India was actually established according to Reserve Bank of India Act 1934. Act passed in 1934, but Reserve Bank of India established in 1st April 1935. And Reserve Bank of India nationalized in 1949. Okay, it was the Hilton Young Commission, or you can say the Royal Commission on Currency. That commission has actually recommended the establishment of Reserve Bank of India, right? So the correct answer here is C, 1935. Clear? 1935 is the correct answer. Done? Good. Next question. What is the minimum capital requirement for setting up a universal bank? What is a minimum capital requirement for setting up a universal bank? Everyone. Minimum capital requirement for setting up a universal bank. See, what is universal bank? Universal bank are those banks which are not specialized in a particular function, like development financial institution, like payment banks. These are specialized in a particular purpose, right? But if we talk about universal banks are those banks which provide every possible financial services to their customer. They are not specialized in any one thing. They provide all type of financial services to the customer. That is known as universal bank. And if we talk about the universal bank, the minimum capital requirement to establish a universal bank is rupees 500 crores. So C is the correct answer, right? C is the correct answer. Done. Next question. What is the minimum capital that is required for setting up a small finance bank? So, small finance bank, it is a type of specialized bank. Now you have to answer what is the minimum capital requirement for setting up a small finance bank. So for setting up a universal bank, 500 crore minimum capital is required. But for setting up a small finance bank, it was B. 200 crore initial investment is required, or minimum investment is required. Okay. Earlier, this was 100 crore. Earlier, it was 100 crore, which is the minimum capital required for setting up a small finance bank. But now it is 200 crore, which is required for setting up a small finance bank. So, second means B is the correct answer. Okay. It was earlier and it was now. Done. Clear? Next question. What is the maximum balance that a payment bank can maintain in each account? Maximum balance that a payment bank can accept as a deposit from their customer. Payment banks, so which are specialized in giving payment services to their customer. So what is the maximum balance that is required by a payment bank in each account? 1 lakh, 2 lakh, 5 lakh, or there's no limit, everyone. So a maximum balance that a payment bank can accept from their customer is rupees 2 lakh, right? Is rupees 2 lakh, right? So payment bank, because these are specialized bank, and what type of specialized activity? Payment services. These are the bank which are specialized in giving payment services, right? And they are allowed to accept rupees 2 lakh as a deposit from the customer. So B is the correct answer. Okay. Done. Next. Google Pay is a fintech company, techfin company, payment gateway, or a neobank. Everyone, please answer this question. Google Pay. Everyone, please answer this question. Everyone, please answer this question. Google Pay is a what? Google Pay is a. Please answer this question, everyone. Very easy question. Please answer this, everyone. Everyone. Yes, Google Pay, you can say it is a payment gateway. Google Pay is what? It is a payment gateway, right? It can be considered as a techfin company also, but Google Pay is a payment gateway. Okay. So new banks are those banks. Yes, new banks are those banks which are actually have no physical branch. These banks doesn't operate physically. They have no physical branch. They just operate online, digitally. That is known as new bank. Okay. So Google Pay is a payment gateway, right? Next question. In which year Reserve Bank of India commenced its business? 1927, 1935, 1942, 1947. Very easy. Reserve Bank of India commences its business in which year? Everyone, please answer this question. Very easy. You can all answer this question, guys. Answer this question, everyone. Reserve Bank of India commences its business in which year? Reserve Bank of India commenced its business, its working in which year? Why 1942, Shirish? Reserve Bank of India established in 1935. So from 1935 to 1942, what Reserve Bank of India was doing? So Reserve Bank of India commenced its business on 1st April 1935 in accordance with Act 1934, right? So Reserve Bank of India commenced its business in year 1935. The year it has been established, 1935. So the correct answer for this question is B, right? Next. In which year Reserve Bank of India was converted into a public entity? So Reserve Bank of India was actually established as a private sector bank with a extended function of regulating all other banks in India. It was a private sector bank, but it was a regulator of all other banks also. But in which year Reserve Bank of India was actually converted into a public entity? 1935, 42, 47 or 1948? Everyone, please answer this question. Everyone, please answer this question, guys. In which year Reserve Bank of India was actually converted into a public entity? So Reserve Bank of India uh, converted into a public entity from 1st of January 1949, which is the date of nationalization of Reserve Bank of India. Nationalization means same. When a private sector bank goes to a public sector bank, it means that when Government of India took a control over a private sector bank and convert them into a public sector bank, then it is nationalization. 1st January 1949, RBI has been nationalized. Decision was taken in 1948. So the answer is 1948. Okay. So 1948, it was converted into a public entity and start commencing business as a public sector company on 1st January 1949. So D is the correct answer. Done, everyone? Okay. Next, the Central Board of Directors of RBI is required to meet at least dash time in a year. Central Board of Directors of RBI required to meet at least how many times in a year? Please answer this question, everyone. Please answer this question. The Central Board of Directors of RBI is required to meet at least how many times in a year? Board of Directors is required to meet at least how many times in a year? 6 is the correct answer. They are required to meet at least 6 times in a year. Monetary Policy Committee Board, they are required to meet at least 4 times in a year. Monetary policies are formulated at least 6 times in a year. But Central Board of Directors of RBI, they have to make a meeting at least 6 times in a year. So B is the correct answer. Okay. B is the correct answer. Done. Next question. Under which act of RBI or under which act is Reserve Bank of India is also called as the bankers to the government? So RBI is also working as a banker to the government. This is actually announced in which act? RBI Act, Banking Regulation Act, Negotiable Instrument Act or Public Debt Act? Everyone, please answer this question. In which or under which act Reserve Bank of India is empowered to be called as the what? Bankers to the government? Everyone, please answer this question. Everyone, guys. And please at least like the video. Whoever is watching this video, it's a request that please write like the video at least, right? So the correct answer for this is A. Reserve Bank of India Act. Reserve Bank of India Act has been passed in 1934, and according to this act, Reserve Bank of India is empowered to be a banker for the government. So A is the correct answer. Done. Next, when the Banking Regulation Act 1949 was made applicable to the cooperative bank. Banking Regulation Act is made or was made applicable to the cooperative bank in which time period or when? So the correct answer for this is Banking Regulation Act 1949 is applicable to the cooperative banks in which time period? So the correct answer is no. The correct answer is C. From 1st March 1966, Banking Regulation Act 1949 was applicable to the cooperative bank. So C is the correct answer. Now you are noticing that every question here is a factual question, right? Year, the first bank, which section, because module C in IE IFS is completely fact-based module. You will find very less concept in module C, and that's why in module C you will get these type of questions in the examination related to year, related to facts. Okay, so you have to focus more and more and more on facts in module C. So when the Banking Regulation Act 1949 was made applicable to the cooperative bank, it is on 1st March 1966. Clear? Done. Next question. Which was the first development financial institution which has been set up in India? It was IDPI, it was SIDBI, it was ICICI, or it was IFCI. Everyone, please answer this question. Everyone, please answer this question. The very first, the very first development financial institution. The very first development financial institution. IDPI, Industrial Development Bank of India. SIDBI, Small Industrial Development Bank of India. ICICI, Industrial Credit and Investment Corporation of India. IFCI, Industrial Finance Corporation of India. So D is the correct answer. So the very first development financial institution which was established, it was IFCI, and the same question asked in your previous exam cycle. This was the same question which has been asked in the previous exam cycle. Okay, now next, with the onset of the liberalization, what structure was adopted by development financial institution? So when LPG policy has been introduced, liberalization, privatization, globalization, especially with the liberalization, DFIs, Development Financial Institution, has been converted into what structure? Commercial banks, universal banks, mortgage bank, or collateralized bank? So the correct answer for this question is everyone. So the correct answer for this question is with the onset of liberalization, what structure was adopted by the development financial institution? Yes, it was the universal bank concept. So all the DFIs were converted into the universal bank. Okay, done. Clear? So ICICI, it was the first universal bank. The DFI which has been converted into the universal bank was ICICI, Industrial Credit and Investment Corporation of India. Right? Next, which of the following comes under the category of investing institution? Investing institution. LIC, ICICI, Exim Bank, or Nabard. Investing institution. In which of the following is the investing institution? You can all answer this question. Which of the following would come under the category of the investing institution? Everyone. Yes, investing institution is a LIC, Life Insurance Corporation of India. This was LIC actually introduced different financial instrument for investing, right? ICICI, Exim Bank, and Nabard, these are a specialized bank working in their own field. But LIC, it is also acting as an investing institution. So A is the correct answer here. Okay, done. Next, how much initial capital was required in IFCI, in Industrial Finance Corporation of India? Initial capital, everyone. Everyone, please answer this question. How much initial capital required in the Industrial Finance Corporation of India? Initial capital required. Everyone, initial capital in the Industrial Finance Corporation of India was rupees 10 crore. A is the correct answer. Yes, it was 10 crore. Kritik and Hema correct. So 10 crore was the initial capital which has been required in Industrial Finance Corporation of India. Next, which of the following DFI, Development Financial Institution, had a counseling role for NRI, for investments in India? So if there is any NRI and they want to invest in India. So for them, the counseling role has been played by which development financial institution? IFCI, IDBI, ICICI or Exim Bank. So the correct answer for this question is, it is important question everyone guys. So you have to answer it correctly. Yes. So the correct answer for this is what? The correct answer is ICICI, Industrial Credit and Investment Corporation of India. They actually play a role of counseling NRI, okay, for their investments in India. So C is the correct answer, everyone, right? Next question. Next question is, the Grameen Bank model was developed in which country? Grameen Bank model. It was developed by Professor Muhammad Yunus. Okay, it's a name I have already told you. Grameen Bank model. It was introduced by Professor Muhammad Yunus. In which country? India, Nepal, Sri Lanka, or Bangladesh? India, Nepal, Sri Lanka, or Bangladesh. Everyone who is watching this video, at least just please like the video, guys. Yes, so Bangladesh is the correct answer. Done. Next, which of the following type of MFIs, microfinance institution, are regulated by Reserve Bank of India? Which of the following Which of the following MFIs are actually regulated by Reserve Bank of India? Everyone. Reserve Bank of India. Which of the following NBFC, or sorry, microfinance institution is actually regulated by Reserve Bank of India? So the correct answer is. So the correct answer is what? Yes, it is NBFC. Microfinance institution is the only MFI, which has been regulated by Reserve Bank of India. So the correct answer here is C. C is the correct answer. Done. Non-banking finance companies, microfinance institution. Next, in which type of financing of self-help group does an NGO act as a financial intermediary? In which type of financing of self-help group does an NGO, non-governmental organization, act as a financial intermediary? Model 1, Model 2nd, Model 3rd, and Model 4. So these models are very important. Again, a very important question in the topic of these self-help group and NGOs and NBFCs. I am going to tell you this model 1, 2, 3, and 4. Now here you just have to answer in which type of self-help group does NGO is acting as a financial intermediary. So the correct answer is model 3rd. Model 3rd is the correct answer. Done. Third, yes, model 3rd is the correct answer. Good. Next question. Which of the following figures in the Fair Practice Code developed by RBI for NBFCs MFI? So, non-banking financial company, microfinance institution, these are regulated by Reserve Bank of India, as you all know. Which of the following figures is a Fair Practice Code developed by RBI for NBFC MFI? There should be a board approved loan application format. No security deposit should be taken from the borrower. A borrower should not be the member of more than one self-help group or all of the above. So very easy question. So the correct answer is Fair Practice Code developed by Reserve Bank of India. Yes, there should be a board approved loan application format. No security deposit can be taken from the borrower. And third, a borrower should not belong to more than one self-help group. So all of the above is the correct answer. D is the correct answer here. Done. Next question. A loan company is a NBFC as per which type of classification? Loan company. So liability based, activity based, and size based. Everyone, please answer this question. Loan company. Everyone. Loan company. Okay. So loan company, if it is a liability base include NBFC D and NBFC ND means NBFC deposit taking and NBFC non-deposit taking. There are different activity based NBFCs like loan company. Loan company is an activity based non-banking financial company. Size based means classification done according to the size. Systematically important, are non-banking financially companies, right? So it is the classification of size based. When we are talking about the loan company, it is activity based classification. Clear? So B is the correct answer. Done. Next question. Which of the following can be considered as a part of owned funds from an NBFCs? So owned fund includes what? Equity share, compulsory convertible preference share, balance in the share premium, or all of the above. Everyone, please answer this question, guys. Everyone, you have to answer this question. Owned fund. So equity, convertible, compulsory preference share, and balance in the share premium. All of the above is the correct answer. These are all considered as a part of owned fund from an NBFC. So owned fund has a definition, proper formula, which we are going to discuss in the paid class, everyone. Okay. Next question. What is the maximum period for which a non-banking financial company deposit taking can accept the deposit? So if we are talking about NBFC D, it is actually a liability based classification. It is actually what? Liability based classification. What is the maximum period for which there is a non-banking financial company deposit taking that accept the deposit? 12 month, 36, 60, or 120 month? Yes, so it is C. 60 months is the correct answer. Done. 60 month is the correct answer. Okay, so it is the maximum period for which a non-banking financial company deposit taking can accept deposit from the public, right? 60 months. Next question. When was the chapter 3rd B added to Reserve Bank of India Act 1934? Chapter 3rd B added in which year? Chapter 3rd B added in which year? Everyone, please answer this question. Everyone, everyone, please answer this question. Chapter 3rd B added to Reserve Bank of India Act 1934 was actually in year 1997. So C is the correct answer. Yes, C is the correct answer. Next question. Which of the following is actually a regulator of housing finance company? RBI, SEBI, Ministry of Corporate Affairs, or National Housing Bank? Which of the following is a regulator of housing finance companies? Everyone, please answer this question. Everyone, please answer this question. Okay. So, which of the following is a regulator of housing finance companies? Housing finance companies are actually regulated by National Housing Bank, NHB. NHB is what? National Housing Bank. So, the correct answer is D. Okay. Yes. Next question. The very first company to be established in India was dash. The first insurance company, LIC of India, Oriental Life Insurance, Bombay Mutual, or National Insurance Company? Everyone. Please answer this question. The very first insurance company to be established in India was the very first insurance company. Yes, it was the Oriental Life Insurance Company, which was established first in India. So, the very first insurance company which was established in India was Oriental Life Insurance. So, B is the correct answer. Next question. What is the extent of FDI which is presently permitted in the insurance sector? So, insurance sector has an update in this year budget 2025. So earlier, if we talk about this question, the correct answer is 74%, right? So FDIs is presently permitted up to 74% in the insurance sector. But now in the budget 2025, it is now 100%. The limit is increased to the 100%. Okay. But you have to answer this. If the question is asked, you don't have to answer D, you have to answer C. Okay. But you must know this, that in this year budget 2025, the insurance in the insurance sector, FDIs has been increased to 100%. Clear? Then next question. The percentage of insurance premium received to GDP is known as insurance premium to GDP is called as what? Insurance premium to GDP is called as what? Everyone. Insurance premium to GDP is called as insurance penetration. Insurance penetration is the insurance premium received to GDP. So A is the correct answer. Yes, Shirish. Yes, Chandan. Yes, Sanjay. A is the correct answer. Clear? Done. So the percentage of insurance premium to GDP is actually the penetration, insurance penetration. Now, the ratio of the insurance premium to population is called as what? Insurance premium to population is called as what? Everyone, please answer this question. So, the ratio of insurance premium to population is called as density. Insurance premium to GDP is called as penetration. Done? Clear? Next question. In which year Reserve Bank of India has been nationalized? In which year Reserve Bank of India has been nationalized? Everyone, please answer this question. RBI has been nationalized in which year? RBI has been nationalized in which year? This is very easy. Yes, 1955 it was SBI which has been nationalized. In If we talk about Reserve Bank of India, Reserve Bank of India was nationalized in 1949. So the correct answer is B. B is the correct answer, everyone. Okay. Done. Next question. How many times at minimum does the Monetary Policy Committee meets in a year? How many times at the minimum does the Monetary Policy Committee meets in a year? 4, 10, 6 or 12? Monetary Policy Committee meeting in a year is done how many times? Very easy. No, meeting is done 4 times in a year. Monetary policy made is or regulation of the monetary policies is done at least 6 times in a year. So these are two things. Monetary policies committee actually regulate monetary policies according to the liquidity at least 6 months means in a bi-monthly basis, right? But if we talk about the Monetary Policy Committee meeting in a year, it is 4%, or it is 4. At least 4 times the MPC committee should meet in a year. A is the correct answer. Okay, done. How many full-time members are there in the SEBI board, Securities and Exchange Board of India? The full-time members, everyone. The full-time member. Everyone, please answer this question. How many full-time members are there on the SEBI, Securities and Exchange Board of India? Full-time members are three. Why you are saying four? No, three is the correct answer. So, Securities and Exchange Board of India is called as the regulator of the capital market. It is also called as the regulator of mutual funds, right? So, if we talk about the SEBI, SEBI has three full-time members in the board. So, A is the correct answer here. Okay. Next question. Under the recommendation of which committee was IRDA, Insurance Regulatory Development Authority, has been established? Malhotra Committee, Tandon, Narsimha Committee, or Ghosh Committee? Under the recommendation of which committee was IRDA, Insurance Regulatory and Development Authority, has been established? Everyone. Under the recommendation of which committee was IRDA, Insurance Regulatory and Development Authority, has been established? Yes, it was the Malhotra Committee's recommendation which actually set up the Insurance Regulatory and Development Authority, right? Malhotra Committee. Yes, Irfan. Yes, Shirish. Yes, Ruchi. Yes, Chandan. Yes, Krishna. It is A, which is the correct answer. Next question. Which of the following is not a sector included in infrastructure? Which of the following is not a sector which is included in infrastructure? Textile mills, waterways, and canal networks. Not a sector in infrastructure. Which of the following is not included under the sectors which are included in infrastructure? Yes, so the correct answer is A, textile mill. Yes, of course, textile mill is the correct answer. Done? Next question. Which of the following are the characteristic of infrastructure financing? So when any development financial institution or a normal bank is providing financing to infrastructure, what are the characteristics? They requires the larger amount. They require longer maturity. There are fixed but low real rate of returns, or all of the above. What are the characteristics of infrastructure financing? What are the characteristics of infrastructure financing? Everyone. What are the characteristics of infrastructure financing? So, if we talk about the characteristic of infrastructure financing, larger amount, longer maturities, fixed and low real rate of return. Yes, so D is the correct answer. All of the above is the correct answer. D, all of the above, right? Next, what is the authorized share capital, or sorry, authorized capital of NABFID? NABFID, National Bank for Financing Infrastructure Development. NABFID, authorized capital of NABFID. Everyone, what is the authorized capital of NABFID? Authorized capital of NABFID. Everyone. Yes, so the authorized capital of NABFID is 1 lakh crore. 1 lakh crore means D is the correct answer, right? And the last question is smart lending for aspiring India is one of the theme of which edition of ease? Ease. Okay, so enhanced access service excellence. Ease is a program which is actually started to boost the customer experience, to enhance the customer experience in the banking environment. There is ease which has been established, right? So which version of ease is actually focusing, or the theme is smart lending for aspiring India? C, ease 3.0 version. So C is the correct answer, right? So this is the complete module C, Macmillan based MCQ, right, everyone? So see, when we are talking about module C, as we have already discussed all the questions, there is no conceptual question. If you have noticed, there is no conceptual questions, right? all the questions are related to either facts, years, or bank names or committees, right? This is all about module C. Module C you is very scoring, right? All you have to do is to learn data, right? There is no concept in the module C, right? So module C is actually very scoring for all of you. Okay. Thank you, Irfan. Thank you, Sadat. Thank you, Krishna, Sanjay, Chandan, Hema, everyone. Shirish, thank you everyone who have joined this session. Guys, it is a request that at least please like and share the video. Okay. Thank you, Hema. Thank you, everyone. And just please, after this class end, just please drop your feedback in the comment box of this video. So after ending this video, if you have enjoyed the session and you have understood each and everything completely, just please drop your feedback in the comment section of this video. Thank you so much, everyone. Take care. Bye bye, guys. Bye. Thank you so much. Take care. Bye, everyone.